And hello, welcome to yet another week of Vishal and Company. There's the three of us, the three musketeers, as it were. We don't have TK in the room at this point in time. He's off being an investment banker. Look at him go. Or, sorry, wealth advisor? What the
I was
hell?
well about it.
Yeah, wealth
Some,
advisor. I'll get it right. What the fuck do I know? Anyway, I've got above me Vishal Tura, and above him I got Joseph Morton, and Maddie is currently away starring in her own daytime movie. I believe that's what's going on right now. Unbelievable. She's number one on the casting call. What? So there you go. Just us. And that was really boring, and I'm sure you're all probably fucking signed off by now. Okay, so we're going to discuss some pretty important things that are going on today. One would be inflation, the highest it's been in 40 years. And also, we're going to be talking about the weird world of crypto and just what crazy things are happening in NFTs and DeFi and everything. Joseph's going to take that up. And then, Elon Musk and his soap opera. So, yeah, we'll discuss that a little bit later. All right, Vishal, take away the markets, please.
all right, thanks there, Galen. So it's been, we're gearing up to a wild week next week, usually December time. We get a Santa Claus rally, but then obviously a lot of traders tend to wait till January. We see a lot of companies like to release bad news because they know not many people are going to be following the markets, in December or in the second half of December. But next week, we have the big Federal Reserve meeting on the 15th, which is Wednesday. We'll talk a little bit about that and why that matters. But obviously, if you've seen the headlines and you see the title of the show today, you probably know why that is important. Let's look at the S&P 500 here and a few other market indices. We had, a very epic recovery at the beginning of the week. Monday and Tuesday, we gained, and, we were knocking actually on the doors of record new highs here on the S&P 500. Record new closes, technically, record new highs were still a few percentage points away. A lot of people thought, hey, that's coming. It's going to happen very shortly. But instead, Wednesday, Thursday, and then today, Friday, we've just beginning to stall here, just like we did pretty much in the first few weeks of November, where we just couldn't get this break above 47.10, let's call it, on the S&P 500. And of course, that's where that major rejection came on the 26th of November. So basically, we're ranging now. We're just combating or battling against that resistance zone. And from here, either we're going to break out into new record highs or we're going to tumble lower. And for that, we have to sort of, I guess, talk about the Fed, which, if you guys have been following our show, you probably know that we all think that the Fed is pretty much playing an integral part. Yeah, they're playing an integral part in the reason why markets are moving higher. So let's rewind a bit. Basically, the whole inflation story. Inflation numbers were coming out higher, and if you guys remember, during the middle of the year, the Fed was like, "Hey, please don't worry about it. Inflation is going to be higher." It's nothing about us printing a lot of money. It's because the economy is so strong, right? People want to spend money. Which is why there's supply chain issues, because it's not technically because of supply chains, it's because the demand is, so strong right now that people are spending money as fast as they could. And it's because the economy is coming back, the economy is booming. And don't worry, inflation is only temporary or transitory. That was the word. They were saying that it's going to disappear. It's just because the economy is reopening. That sort of morphed into this whole supply chain issue. And again, there's the debate between, is it because the economy is so strong and people are buying, or is it actually because of, COVID issues? And then from there, just recently, it's turned now to, hey, it's time to retire the word transitory because now it looks like inflation is going to be here at least until the second half for 2022. So for someone like me, it seems like the Fed is kicking that can down the road, trying to buy some time here. And this is where things get really interesting, because just today we got another inflation number that ticked above 6% or 6.8%. Once again, a lot of, I guess you could say, people that were believing the Fed story about transitory inflation we're expecting that last month and the month before that CPI data was the top. But unfortunately, it's not the top. We hit 6.8%, which is probably forecasting to more higher inflation numbers coming down the road. And the big debate again is if the Fed is correct and inflation is just transitory and temporary, then they've bought some time heading into next year. But if these inflation numbers start spiking up as we get closer to the mid half of 2022, and say we go into double digits inflation, right? A lot of people in the markets will probably say, "Hey, what the heck? Maybe the Fed is wrong," and they begin to price, the Fed actually messing up, which means that the Fed would have to hike interest rates very, very quickly in order to catch up to combat inflation. And there's a really cool chart here I want to show you guys. This is this consumer price index, so the CPI inflation data from going back to 1998, 1980. And, I wasn't alive, but basically when inflation was double digits, when inflation was double digits in the 80s, the Fed chair named Paul Volcker raised interest rates up to 20% in a very short amount of time to combat inflation, which again, people thought he was crazy back then, but imagine doing that in this type of world where where there's so much debt out there and people are borrowing money for mortgages and stuff. It would be quite a brutal thing to think about. But I'm not saying that this is a technical chart, but hey, we sort of have a breakout here, around 6.8%. We've broken out, and maybe there's higher inflation numbers here to come. Which leads us now to the Fed's meeting next week. And again, keep that in the back of your mind there. Is the Fed pricing in, or is the Fed thinking this inflation is transitory? If so, then, inflation numbers will come out higher and higher and higher. But then you have to assume that one day the market's going to call the Fed's bluff and say, hey, inflation's out of control. Or, if the Fed is sort of recognizing that, hey, maybe this inflation stuff is not necessarily due to the economy reopening. We have to maybe just start prepping for eventual rate hikes sometime next year. And
I think they're already looking at that because the Canadian bank or the Bank of Canada, I should say, has already softballed this question. Mm-hmm. They've admitted that it's here, that it ain't going away. Yeah, but they're like the banking industry back when the housing market was about to fucking collapse. They got a lot of investments they have to worry about, and a lot of people they've lent money to, and all that stuff. So they're gonna try and pedal as much as they can to protect their interests. Exactly. I mean, I don't know if there's any real financial interest because their debt is our debt, but I mean. It'll be interesting to see. Are there going to be people that are going to play both sides of it before we're out of it? I'm thinking probably JP Morgan.
Perhaps. Perhaps. And see, the question is now next week, people are expecting the Fed to, as Galen just said here, to sort of speed it up by saying, hey, remember our tapering, we're tapering our bond purchases. Well, we want to now do it faster, right? Like we're going to taper a significant amount. And that's usually a sign that, okay, if the Fed's not buying bonds, maybe they're looking to, begin to raise interest rates sometime down the road, which takes us back here to the equity markets. And that's the big question, right? The big question here is, okay, is this market moving up higher because of PE ratios, future expectations, all these growth companies about, good things that are coming down the line? Or are markets, moving higher because there's nowhere you can place your money, right? Because interest rates are so low, you literally have to be in the stock market or say cryptos or any other asset, right, to make a yield.
Can I speak to that for a second?
Sure, yeah.
I was speaking with somebody on one of our Discord channels, a really interesting fellow or person, I should say. I shouldn't gender that. I don't know if it's a he or her or them. So anyway, I was speaking with them, and their idea is that, woohoo, the stock market's great, we're doing fine, everything's good, to a certain extent. And I came in and I said, well, can you buy food with stocks? And his immediate response was, well, I mean, if I'm having to buy food, then I'm obviously don't have stocks. And as far as I'm concerned, I mean, that's a bit of a an argument. But however, not really, because the CPI is merely the canary in the coal mine. What's going to happen is that when you're having to prioritize your spending on a personal level for essentials such as mortgage payments, rent, car payments, property taxes, all that kind of stuff, that just snowballs from the idea of CPI increasing. So what I was trying to say is that, in the real world, your yields don't mean shit until you've actually taken them out of the market. And when that happens, we're going to find out what a bubble it was. Now, I have a comment from TK, in fact, who's watching our show. Do you feel these are the consequences of being the gold reserve currency? Massive currency depreciation to service all the USD denominated debt?
Yeah.
Fire that in. How do you feel about that, Vishal?
Well, that's what I've been warning about for a couple of months actually here. There's going to be a period. This is why the currency markets are going to be crazy, and I think this has already begun. If you've read some of my work in the past few months, this U.S. dollar chart and that double bottom I was sort of warning about, that hey folks, there's going to be a strong U.S. dollar here, and people know that something's coming. People are preparing. I'm talking about the rich people, probably the elites most likely, and you gotta take advantage of this, right? Because if the dollar's moving, be prepared. And we've seen what's been happening in Turkey and all these emerging market countries that have a lot of dollar denominated debt, because the thing is, over in Turkey and places like South Africa and other emerging market countries, interest rates are very, very high, right? In Turkey, we had rates at one time was 13%, 12%. Now I think they've cut it down to like 6%, which is weird because you'd think they'd be raising rates to try to get the lira to strengthen. But what's happened in this whole decade, I would say, is because rates in these emerging market countries were very high, but rates in the US were very, very low. A lot of corporations in these emerging markets, rather than borrowing liras because they would have to pay a high interest rate, they've gone to the US and borrowed dollars because the dollar is that reserve currency. It's actually very easy for foreign corporations to borrow dollars.
Evergrande.
So they've been borrowing dollars, right, for a cheap cost, and they were hoping that one day, the lira is not really going to necessarily depreciate, because now they have to pay those dollar-denominated debts with a weaker lira. And that's sort of the issue here, right? That's what I'm sort of worried about, because if this dollar does continue to rise, here, you're going to see much more problems, right? A lot of people think that, the dollar moving lower is going to be the death of the world or the death of the economy or whatever. It's actually the other way around. If the dollar moves higher, that's when all the real problems around the world start to
on the end of that dollar-denominated debt, it notes the strength in the economy domestically, but any kind of international transactions will be subject to some sort of nasty exchange.
Well, it's more of like a risk thing here, right? Because money has always been flowing historically into the dollar since 1971, because it is the reserve currency. It's the safe haven, which means that there's this artificial demand, right? So essentially, the U.S. and the French called them out, right? The de Gaulle and the French in the 70s, this is why they returned, or they tried to take out their gold, but they called it out, right? They called it exorbitant privilege, because technically the US never has to pay back their debt.
No.
As long as they are the world reserve currency, the debt doesn't actually matter, because they can print as many dollars as they want, because there's always an artificial demand for it, which is the reason why they're in such a privileged position. But the issue is, if the dollar strengthens so much higher, all the other countries, including allied countries of the US, would get very upset, because it causes more problems for them. And then they would sort of team up to say, hey, US, you guys got to do something. And this is where maybe countries like Russia and China, who might get a bit more of worldwide love, I guess, if there's a stronger dollar, might sort of step in and say, yeah, maybe you guys should be, or we should lead this new change here or whatever. There was something like this before. It was called the Plaza Accord.
Trying to do that for years.
Yep. I mean, China's been trying to fuel that particular initiative for a while now by providing much of the East Pacific or East Asian countries that kind of financial support without having the U.S. step in.
Exactly.
Do you think that will make them the lenders of choice?
I'm almost saying exactly what it would be.
Whenever we have a global financial crisis, China brings up the idea that maybe the United States shouldn't be the currency of now.
Exactly.
And the rest of the world's like, dude, go have fun torturing your Uyghurs or whatever they're doing.
Exactly. Like that's the thing, right? I don't think the world would look into China just because, first of all, the currency is not free floating and they have a closed capital account, right? You can't easily get money out of China just like you can, with the US or Canada or other countries. So that's sort of the issue, but maybe they coerce the world. I don't know, right? Or there's like a different type of monetary currency, sort of a multi-basket of currencies, right? This has happened before, right? There was the Plaza Accord, which happened in the 80s, and the dollar was so strong that the world ganged up on the US and said, hey, do something about the dollar. And essentially, within a night, the US devalued their dollar, which basically caused other currencies to rise, more specifically the Japanese yen, because, Japan was the big sort of power in the 80s, or well, not the power, but they were the strongest economy in the 80s. And because their economy was export related, they wanted a weaker yen. But because the Americans had to devalue the dollar, the yen strengthened, which played a big role in, the Japanese collapse, I guess, right?
Now, devaluing the dollar would hurt the Americans in terms of buying power in importation, which they do a lot of. Now, good question here from TK again in regards to China's rising superpower aspirations, I guess you could say. What does that mean for virtual currencies then if the next global superpower is against them? Because it's been quite clear that it doesn't want anybody toying with the crypto world.
Well, in my opinion, they're creating their own, right? There is going to be a digital currency.
Well, I know, but I mean, in the end, the digital currency that is contained and made by one country is merely a digital representation of fiat currency. It's not a cryptocurrency. So what does this mean then for Bitcoin and Monero and all these other guys?
The decentralized currencies are always going to be a thing. And if they have to exist in opposition to a specific country, that's more or less what they were built to do. Mm-hmm. Like they're built in a way in which they can hide as best they can from any kind of domineering government force.
Now, would that force them into a black market status? Therefore, much of the protections that are afforded by having something that's on over the counter or just right there in front of everybody will be gone.
Well, you ask that like they've never had anything but a black market status. I mean, they're starting to climb more or less into legitimacy now.
Well, that's what I'm saying. Is that if China decides that it isn't legal, you aren't going to do it. They're the main power. Would that not force them back into the dark market, whatever, black market?
Sure.
I'm asking. That's all.
If anything, it'll probably, honestly, if anything, it'll probably be good for coins like Bitcoin and such, because anyone who wants to oppose China, anyone who wants to buy anything which is not on the Chinese accepted list is obviously going to be picking up some Bitcoin or Litecoin or whatever it is they have to do too. I mean, it's going to create a secondary market. Well, there is a secondary market, but it's strengthened the secondary black market because not everyone is going to want to kowtow and toe the line. I mean, even in modern China right now, with their social credit system and with their concentration camps in Xinjiang province, there are still people who they're not paying attention. They're not toeing the line. China necessarily has had to crack down in recent weeks on miners who refuse to leave.
Do you think as the Chinese population rises itself out of general poverty, which is basically where it's at, and the government is trying to do its best to get them into a sort of a middle class state, do you think that affluence will then bubble over into the rebellion against the political structure?
Well, that's the CCP's actually biggest threat, right? It's not America, it's not Russia, but it's actually their own people rising against them.
For the most part, it's their own people. I mean, there's a bit of an unusual bit of a dissonance with China and their relationship with class. I mean, the CCP wants to kind of maintain. I mean, they want to flatten out. I mean, this is official lines. They want to flatten out. They want to become the official Marxist or Maoist state, I suppose. But they they want to do that and maybe keep the millionaires and billionaires on the world stage. And they want to be able to participate in, they want capitalism, communism. They want their cake and eat it too. And they're going to have to ultimately make a decision.
Yeah.
And right now they're too busy rounding up minorities and using them as political scapegoats to.
No, it's very true. They're attempting
anything.
to keep their control through traditional methods. I mean, they'll probably just morph them somewhat. We have more subtle ways of control of the population. They may just sort of advance those things like, social media, influence, other types of things, and not necessarily rounding people up in the middle of the night and making them disappear.
Not in the middle of the night. They do it in the afternoon too.
Well, okay. Well, no, yeah. With them, it's not really a problem. They just come and get you. But I mean, do you know what I'm saying? That there won't necessarily be a mass imprisonment per se, but perhaps a more cultural stranglehold.
Yeah.
I see mass imprisonment. Mass imprisonment is happening right now.
Yeah.
No. That's what I'm saying. But as we progress,
yeah,
will it change? Will they become a more democratic state, if there is such a thing, or will they just morph their procedures to be less visual?
Well, that was the hope, right? When we let China join the World Trade Organization in the 90s, the hope was that they would democratize, right? But 30 years later, it's gone the opposite way. They've done, they've probably got more authoritarian.
See, that's the thing, is that people don't.
Okay,
go ahead.
Historically, totalitarianism and authoritarian governments are usually a quick route to eventual failure.
Yeah.
So I'm not even sure within the next generation China's can even look the same as it was.
Might not, yeah.
Interesting.
We should say though, one thing I just, I don't think people sort of understand like the state control over in China. Like it's pretty big, right? It's pretty bad. I mean, we hear about the.
Well, you have neighbors reporting on neighbors. It's not just the government itself, right? They have a network of eyes.
Exactly.
Just like East Germany did.
It's just like that. Yeah. One thing I learned is a system it's called the Bukou, I believe, Bukou. I've been reading Dalio's new book and stuff, but you have to have permission to leave your city to go to other cities, right? If you're in a lower class, or if you're like 900 million, if you're like the 95% of the population, you need permission from the state to say, hey, I want to go to this city for vacation or for a holiday or for whatever, right? Like it's crazy. I didn't even know about that, right? Until I read that. You need government permission for your driver's license, right? Although the positive thing that people say,
you can need government permission here for a license as well, right? You have to pass a test.
No, it's a lottery system there, right? There's no test. It's a lottery system, right? Okay. So you're picked. You might have to wait 10 years for your license, unless you buy an EV though. So some people say it's a positive incentive to buy. There we go, Joseph, a perfect police state undercover surveillance. But yeah, it's pretty bad there, right? People don't really understand how pretty authoritarian they are.
The totalitarian system is actually quite different than what we even know. My mother went to Russia before the breakup.
Yeah.
She and my grandmother went to Red Square, in fact, in and around. And my mother had made friends, but they had constantly people following them everywhere they went. Yeah. And any kind of correspondence that she had with the woman that she had made friends with, it all came opened. Like someone went through the fucking mail.
Yeah. I was in China in 2012 for 2 months. Again, the people are great, right? But if you guys know when you're traveling there, like they need to know your itinerary, right? So they have to know every day where you're going to be sleeping, where you're going to be, and you have to have that planned out for 60 days before you hand in to get your visa. I was there for an archaeology school through UBC, but a few Chinese students joined us, and it's very likely, they didn't know anything about archaeology, so it's very likely they were there to keep
minders.
Yeah, minders.
Yeah, the book I posted in our Discord channel is actually gives the idea of a technologically aided totalitarian society.
Yeah, exactly.
I mean, it's the difference between modern China and
hey, Peter Thiel, sorry,
USSR state Russia, is that China has more advanced technology. They have AI algorithms which will actually, they'll run the numbers. Like, okay, for example, if you stay home from school one day, the AI algorithms will run the numbers to determine the likelihood of you committing a crime, and cops will show up at your door to arrest you.
Exactly.
You haven't done anything yet.
It's scary stuff, man.
Well, I mean, it's not totally in the eyes of or totally in the hands of China. We have very similar things here. We just don't get to see it as often. We have the NSA tapping phone calls. We have Peter Thiel running Palantir Technologies, which basically keeps an eye on everybody. It's and makes, as Joseph was describing there, predictive judgments as to what you're going to be doing next based on the data that it receives. So
the majority of this tech is actually built by the companies over here that you're mentioning.
Sorry, what's that again?
The majority of the tech that China's using to surveil its own people is built by the American tech giants.
Oh yeah, totally. Just like Ford helped the Nazis.
Yeah. So did IBM.
Yep, totally. You want to count how many people you'll kill? Here's the machines. There we go. Oh man.
But yeah, I mean, again, it's any other questions there that Tika had? Or?
No, but I just had another sort of link. I'm going to find out if this is something or.
Sure.
I'm
Jesus
post a naughty link
Christ.
again.
Fucking spammers. Anyway, yeah. Thanks, Amy. I'm not interested in pornography. gonna remove that statement if you don't mind. Thank you, Amy. There we go. Fucking
Doesn't include
people.
a certain market sentiment?
Yeah, it's the same as that other girl the other day. They all just want us to look at pornography. I guess that's what YouTube is all about. Not about the dissemination of information, but looking at dirty pictures and cats. Anyway,
right.
There we go. Fucking guys.
Yep.
All right.
So yeah, market wise, again, just it's going to be a huge week. Next week, I think, with the Federal Reserve and stuff. And I would just tell people, be a bit cautious here. Don't be making crazy large amounts of or don't enter large amount positions just now. You might as well just wait until after the Fed, or maybe until January, just because the markets are probably going to be a bit slow this month. So basically, yeah, we're just all eyes are on the Fed next week. That's really what it's all about now. And I think today's inflationary numbers like this, it definitely does spice things up, because people are expecting the Fed to be a bit more hawkish next week in terms of, hey, we have to maybe now start tapering a bit quicker, and we'll go from there. Actually, the funny thing is I haven't taken a look at the Fed's balance sheet, because in the past, whenever they've said they're initiating taper, the balance sheet actually keeps increasing. So let's just quickly...
have they picked up more fucking shares?
Let's take a look here at the
Nice.
balance sheet, so December 8th. So, I mean, it's still slightly rising, but if we zoom in maybe... Yeah,
they're still taking shit on.
It's still an uptrend. It's not necessarily a downtrend.
What do you think? Loaf of bread, $50 next year?
Yeah, no, seriously. Realistically, the idea of blaming the pandemic for what's going on right now, this is merely just a distraction. The system has been broken for a long time, and I'm not trying to be some sort of revolutionary. Yeah, split up the money, take it with everybody. The system has been economically dysfunctional for a very long time, at least since the 80s. The 70s beginning, realistically. And it was only really good after the Second World War because we sacked Germany. So, we have some things we need to sort out in terms of money velocity, in terms of income equality, in terms of the meritocracy that we have currently. There's all sorts of things we need to deal with. And it's not going to be pleasant for anybody, to be honest with you. Globalization was a huge fucking mistake. It's only created more problems than it's healed. Look at all the shit that's being sold on Amazon. We have a lot we need to answer for. And I have a feeling in the next 6 to 12 months, we're going to see the beginning of the lost decade. That's my opinion. I'm Chicken Little. I'll admit it. But you're not going to call me homeless either. I don't believe in the stock market as being the immutable place that will forever be a great hold for yield. I think right now it's a complete fucking casino, and it's not just on retail investors' part. This is institutional investors, hedge funds, which the same thing. But it's everybody has treated it like that. And of course, the house, being the institutional guys, they're going to let it run as long as possible and let the rest of us get cleaned out.
You raise a good point there, Galen, just because everyone now is talking about, have we become Japan, right?
Yes.
Like, is the best case now like a 30-year drop in markets and real estate where everything just starts to deflate because we can't raise interest rates anymore, right? Where essentially there's so much debt out there that we have to go negative rates, follow what the Japanese have been doing for over a decade, follow what Europe's been doing since 2014, follow what Switzerland's been doing since 2014. I believe the Scandinavian nations are in the same boat in negative interest rates now as well. And that's the big question, right? Like, are we now going to be Japan? Because, Japan had a booming economy up to 89. And then from there, real estate began to fall. And it still does, right? It still drops slightly. And hence why it's mostly a nation of renters now, because, you don't necessarily want to take out a home equity loan, or you don't want to get a mortgage if you know the house is going to get
To be honest with you, I wouldn't
year.
want to buy property now.
Yeah,
It's
and that's the thing. So the only difference between where they are and like where we are now is essentially it took a while for the Japanese or the Bank of Japan to start buying stocks and buying bonds and buying ETFs, right? Where here, we have the Fed already buying assets, like they're saying bonds, but there's a lot of people claiming that, hey,
they're buying the fucking stocks. They're getting
the Fed is probably buying stocks as well to try to keep this whole thing propped up for as long as possible.
I was going to wonder how much this has to do with their aging, non-replacing demographics when it comes to
right? Yeah.
their economic malaise, because we get a lot of the same things over here, but we have a lot of immigration. So I don't think we're necessarily going to end up like Japan, because I'm pretty sure those two are related.
Mm-hmm.
Okay.
Yeah, the demographic thing is huge. Yeah.
I don't know. I think at this point in time, there's only so many turns that you can have on the organ grinder before it blows up. And we really fucking cranked that thing over the last decade. So it's going to be interesting to see what happens over the next little while. The world could make me a liar. It doesn't make me wrong, I guess. It just means that we're able to prop it up a little more, and the emperor wears no clothes continues.
Yeah.
I get what you're saying, comrade.
Yeah, and just because I'm saying this doesn't make me a fucking communist. It just makes me, realistic, right? The establishment of this much debt that is actually required to prop this consumerist economy is unsustainable. It's insustainable. It can't work forever. And debt in and of itself is basically violent oppression. And I'm sorry to bring that out. It doesn't also mean that I'm some sort of socialist or communist. It's just what it is. Debt is servitude, right? And when you get this much out there, you are hugely in danger of having a violent uprising. Right? This, on all sorts of levels, domestically, internationally. Some of these countries that owe the IMF so much money that will never get out under the thumb and ever prosper might just go, well, fuck you. The next person that comes in here, we're just going to start bombing. You know what I mean? It's just...
So, I'm going to plug this book in again, because it's exactly what Dalio talks about. It's called The Changing World Order. And if there's some of you guys, there's a book that is always brought up in investing circles. This book was actually written in 1997, and it's called The Fourth Turning, and it's talked about the years 2020 to 2025. There's going to be disease, there's going to be a pandemic, there's going to be a war, monetary policy, and it wasn't because they had a crystal ball or anything. It's just because they found a cyclical pattern just by looking at monetary cycles. Every 80 years there's like a new switch. So again, book came out in 1997. It's getting a lot more hype now because everything they said in that book is pretty much coming true. And, Dalio's book just came out last week, and he talks about the exact same thing, that this period of time that we're in is the ending of basically this Keynesian system. And there's going to be, a revolution. He hopes it's peaceful, but generally it's violent.
It's usually not. That's the problem.
Yeah, exactly. He's hoping for a beautiful deleveraging. That's what he calls it, but he says that it's probably not going. It might not be. And he also says there's going to be currency debasement, which we're sort of seeing right now, which is why he's always been saying cash is trash. And also, unfortunately, there's likely a high chance of external war. And he claims, the Thucydides trap between the U.S., which is the declining power, and then the Chinese, which is the rising power.
There'll be conflict.
Yeah, and
basically it's more of a Leninist thing than it is Thucydides.
But I mean, yes and no. I mean, but you're
Thucydides
also
trap. Yeah,
it's if you're looking at the conflict potential. I mean, Russia now just sitting on its haunches, ready to leap into the Ukraine, is going to be a big problem in Europe.
Yeah.
Right?
Well, and you know, I'm going to say this, and a lot of people have said this, but when Russia moves into Ukraine, it's not going to be by themselves. It's going to be when China moves into Taiwan. They both countries are going to do it, you know, at the same time, because
and that would be a literal thumbing your nose at the U.S. and the NATO alliance.
Yeah, because you know, and again, this is just geopolitics, right? The U.S. is sort of like representing Rome, you know, where it's too expensive to have the army out there.
No empires are forever. Everything falls.
Yeah, with the, like, you know, if I was in the Russians or the Chinese boots right now, I would be, you know, saying, hey, now's the time, right, to move in. When the Americans left Afghanistan a couple of months ago, that was the key sign, right, that the U.S. is now, they have too many problems, domestic problems at home, they're broke. Now's the time to move in. You know, if we move into Ukraine and if China moves into Taiwan, the U.S. has to fight a two-pronged war. Look at their leadership right now, right? These are the type of guys you want in power if you're going to start a war.
Well, I mean, it's not even them. Anybody that they have in power. The United States doesn't have the leverage anymore. It doesn't have the army that it needs necessarily, or the general support, and even the morale, the higher level of morality.
Moral purpose.
Yeah, there's, you know, it loses on pretty well every fucking front. So we'll see what happens. I don't know if Ray Dalio's description of a beautiful leveraging takes into consideration just how shitty it's going to be for everybody. This is not going to be like leveling the playing field, releasing the debt, which is necessary, will cause a huge fucking global depression, and we're all going to feel it. And those of us that have been privileged over the last little while, meaning the last 200 or 300 years, are really going to get a kick in the ass. Because,
no, he says it's going to be like it's going to be pretty bad, right? Like he's saying that this is the 30s to the 40s, that period. So his it's going to be pretty bad. But you know, the thing is, like,
the super rich will be fine, fuckers. But
there's going to be a new system, right? Like, I mean, the super rich are already running off to New Zealand in their bunkers.
You know, fuck. I would too if I had the chance.
Yeah, but I would definitely recommend this book. If you're into like economic history or cycles, like I am, I think you'll enjoy this one. But yeah, Fourth Turning is what started it. Again, 97, you read about it and you're thinking, what the hell? This is all representing everything that's happening now. But again, the same cycles, I think, is what Dalio is applying, because this book's had such a huge...
and I think there's another book that you may want to include in that list, The 5,000 Years of Debt.
5,000 Years of Debt?
I'm interested.
If I'm remembering the name correctly.
5,000 Years.
The first 5,000 years.
Okay, David.
It's an amazing book that really delves into the idea of debt, economics, and how it's been since the dawn of time. And it's not essentially been what we've been told in classrooms. It's been a lot different than what we've pictured. So it's interesting to take a look at.
Probably we'll talk about it off air because I think it's probably controversial.
Oh yeah, no, it's all controversial. Everything's controversial these days. Now, okay, I'm gonna say, you know, we want to bid you a fond adieu, Joseph. I guess we didn't give you as much of a floor as we probably could have. I apologize, but we did get to talk about China and crypto, right?
Yeah, I got in there.
Okay, all right, good. As long as you're feeling represented. I really appreciated your input. I thought it was really thought out and thought-provoking. Vishal, great breakdown of the markets and the global picture. I, of course, sat in my corner and ranted, you know, and said stupid things like I'm an old man screaming at kids to get off my lawn. And look, they're already signing off. Also, just a quick note, Elon, I'm so sorry that you want to quit. Here's the fucking door. Don't let it hit you in the ass on the way out.
I was actually just going to say, right when we were about to sign off, I was going to say, hey, Galen, you didn't talk about Elon today, man.
No, I didn't. I got all sorts of things I could say about that. Manipulating a brick. But that's basically the short of it. All right. Everybody take care. Thank you so much for participating and all the great comments. You know, if you're gonna put a URL link for pornography on the show thing, I'm just gonna fucking delete it. So yeah, thanks. All right. Take care. We'll see you next week on Vishal and Company.
Take care, everyone.
All righty.